Hi, I'm Barry Roach, host of Leaders in Lending, brought to you by Upstart. The following is a conversation originally aired on an America's Credit Union webinar late in 2024 titled Capturing Prime Members in 2025 and Beyond. I chatted with Michelle Goeppner, the Vice President of Consumer Lending and Product Strategy at Vantage West, a $3 billion asset credit union based in Tucson, Arizona. Michelle and I discussed balancing loan growth with limited liquidity, growing prime members, and working to expand those relationships. Thanks for listening, and I hope you enjoy it.
All right, everybody, let's get started. Hello, and welcome to America's Credit Union's webinar, Capturing Prime Members in 2024 and Beyond. My name is Adam Wright, and I'm a manager of online learning projects at America's Credit Unions. If you haven't already, feel free to download today's presentation handouts. You'll find them available under the Resource tab in your Zoom toolbar. As a quick reminder, please keep yourself muted during today's presentation. If you have questions during the presentation, please enter them in the chat. We'll be taking questions at the end. We are happy to have Michelle Goeppner and Barry Roach sharing their expertise with us today. Michelle is the VP of Consumer Lending and Product Strategy at Vantage West Credit Union. With over 20 years in financial services experience, Michelle has accumulated an extensive track record of taking on the challenge and responsibility for high-profile product marketing, strategy, and lending initiatives. Barry is a senior account manager at Upstart. With over 30 years of experience in the financial services industry, Barry has proven leadership of large, multifaceted teams of financial professionals which delivered above-market financial results. Previously, as president and CEO of Water and Power Community Credit Union in Los Angeles, Barry led the organization to achieve significant asset growth and improvement in financial strength while improving all aspects of the digital experience. Without further ado, I will turn things over to you. Thank you, Michelle and Barry, for joining us today.
Thank you, Adam. Next slide, please. And next slide, please. Hi, Michelle. Nice to see you. Please take it away, and then we'll get into the discussion for today. Thank you.
All right. Thank you, Barry. Thank you, Adam. Thanks for having me. Hello, everyone. As Adam said, I'm Michelle Goeppner, the Vice President of Consumer Lending and Product Strategy from Vantage West Credit Union. So Vantage West Credit Union is based in Tucson, Arizona. We have military roots as we served the Tucson Airmen and their families back in the 50s. And now we have evolved to a state chartered credit union known as Vantage West with just under 200,000 members. We're $3 billion in assets, and we've got 18 branch locations across Tucson and the Phoenix area.
Great. Thank you, Michelle. And thanks for joining us today. Just for the audience, Vantage West has been a valued partner of Upstart for the past couple of years. Michelle and I work very closely together. We speak, if not monthly, I mean, usually once a week or so. There's a reason for Michelle and I to get together. What we're talking about today is really about capturing prime members in 2025 and beyond. And I think the experience with Vantage West, they've already captured a whole bunch of prime members since they came on as Upstart partners back in later 2022. So since that happened, Michelle, let's just talk a little bit about when you started partnering with us. Economic conditions evolved quite a bit. I mean, we were at that point just coming out of sort of COVID restrictions and stimulus and this ramp of deposits and lots of liquidity to sort of all of a sudden liquidity somewhat seized roughly 6 months after that. And so, where you maybe had some higher loan growth projections in layer 22, that kind of quickly shifted. So maybe share a little bit about how you were adjusting not just the Upstart program, but all your loan growth goals from when the liquidity kind of got a little tighter, and then as it started to come back, because we have certainly seen in the past year how deposits have come back a little bit as well.
Yeah, absolutely. Well, to say it's been an interesting lending environment the last few years would be an understatement. And it certainly has been since we started partnering, Barry. I think in the fall of 2022, I think we've had, 10 or so rate hikes since then. And
at least,
as you mentioned, yeah, we had some liquidity constraints, as I'm sure many watching and listening did as well. We had to intentionally slow down our lending, which is always a hard message as a lender and an originator to tell our teams we've got to slow it down. But thankfully, we've been able to turn it back on. And with the Upstart partnership, we went with the slow and grow strategy. So we started in our market, Arizona, with, originating a few million a month and then testing it out, to see how it worked. How did it work for us? How did it work for our members? What was the feedback? And then we steadily, started ramping up volume, both because one, getting our feet wet with the program, but two, as you mentioned, the changing environment. And then from there, we started to expand markets. And I think one of the things I love so much about this program are the levers that we can control. And, being a control freak, I want to be able to do that. So whether it's adjusting our net return or our expected loss rate, our volume, our max loan size, that's the great thing about this program is the customizable flexibility.
Great, great. And the partnership that you have internally, because I know you in the lending group, you always have those aggressive goals, right? I mean, you're always trying to put more money on the street. You're trying to find ways of not just, and this isn't just a financial thing, Michelle. You're not just trying to sort of grow the balance sheet. You're actually trying to help those members that you have with their next purchase need or wherever the case may be. But talk a little bit about that partnership, like how that's sort of the catalyst for you to be able to realize and recognize these great loan growth goals you have. You also need to have the support of the risk side of the business and the finance side of the business. So maybe talk a little bit about how and you and the rest of the lending folks have been able to sort of make sure everyone's sort of riding on the same tracks of the train.
Yeah, I think one of the things we learned through this partnership specifically was the importance of bringing on your key partners across the credit union early and often to get comfortable with it. I think everyone involved in community lending would love it if there were endless volume potential within their geographic footprint, but unfortunately, that's not the reality. And so we took the approach of expanding beyond Arizona so that we have the funds to do more within our community. And I think that was a big challenge for some folks internally to adjust to. We're a local credit union. Why would we be partnering with this fintech? Why would we be going to other markets? But it was really helping to tell the story that we could better serve our community if we have those dollars to do so. And so sometimes you have to go outside to get those dollars.
So growth beyond the sort of traditional branch footprint or field of management footprint you have as a catalyst to be able to make those investments, to get the revenue, to make the investments, to get a better value proposition for those that are sort of inside. So there's many ways of doing it, right? But I think you guys have kind of figured out a really good formula for it. So I know you've got other fintech partnerships, not just Upstart, for several as well. And I do know that there's a bit of an evolution with you in your world. I mean, you were traditionally, you're a lender, right? And have been a lender for a lot of your career. And now it's like, okay, Michelle, you're doing such a great job with lending. We need you to look after deposits now, which is, really almost flipping the hat a little bit, but I would think a similar sort of an approach or similar sort of guidance in terms of how you would try and find those new deposit opportunities to help you with those lending opportunities. So maybe tell the audience a little bit about that evolution within Vantage West and kind of how you've seen sort of similarities, I guess, in your approach as you're looking at getting deposits as well.
Yeah, well, more broadly speaking, fintech is a critical part of our growth strategy at Vantage West. So while you all were one of our first partners, we've since added other partners for auto refinancing, loan decisioning, improving our digital experience. And so, now with deposits, we're really focusing on how we grow that. We have at Vantage West what's called our rally cry, and it's where everyone focuses on one strategic priority across the credit union. Yes, everyone has a day job and other things they're responsible for, but the rally cry is the one thing that we get everyone to rally around and really focus on. And that right now for the next 6 to 9 months is deposits. So we're looking at a whole bunch of things, between a refresh of our deposit products to a new digital account opening solution, digital engagement tools. So that is a huge focus for us. And of course, as you know, that allows us on the other side of the house to keep originating.
Absolutely, yeah. So I love the idea of a rally cry. I can't say that the credit unions that I ran, we kind of had, we didn't call it a rally cry, but we tried to do a similar sort of thing. Like, what is the one topic or the one focus on our business that we can all rally around?
Mhm.
And maybe that's in a indirect way, sort of answering the last question about how do you get everyone on the same page, the finance folks, the risk folks, and so on and so forth, right? Just it's maybe it's a little too early to sort of share some successes with that, Michelle, but you've talked about sort of some product development and redevelopment and so on. What are the projections for this? And I know this is not just a 6 to 9 month thing, because I'm assuming that you're building something that you think will have some sustainability going forward into 26 and beyond from there.
Yeah. Well, we're pretty early in this rally cry. This is our second one since we've gone to this strategy. So our first one was around reducing operational expense. And at first it was a little confusing to people, but then it just became this idea of, when I have to make a trade-off of where to invest my time or my resources, it's you lean into the rally cry. And so that rally cry was so successful, and we were able to get our OpEx down substantially, that we said, okay, let's try it again. What's the next big focus? And so now it's deposits. So don't have any early, I guess, metrics or anything to share just yet, but come back in a few months, and I'm sure we will. But I will say that it's done a great job of unifying everyone across the credit union and focusing on one specific thing.
Perfect. Yeah. So, and yeah, it's unfair maybe to ask for sort of those metrics now with this new rally cry, but I'm glad you brought up with the operating expense, because it's something that we all say we keep an eye on. But you'd be surprised when you start to look under the couch cushions and
Ooh.
see all those revenue leakage opportunity or other expenses that just sort of have always been persisting within the credit union,
Yeah,
but quick opportunities, right? So that's kind of a fueling, I guess, some of the other investment and growth opportunities that you're trying to do.
absolutely.
All right. Let's talk a little bit then, about one of the key aspects of the partnership that you've had with Upstart. It's not just finding new borrowers, but you've also got a bunch of brand new members, right? So starting in Arizona within your traditional field of membership, now sort of expanding beyond. So thousands of new members have also sort of come in to the credit union. Can you describe a little bit maybe around how you've been treating those new member opportunities? Like, what's been sort of working to leverage to get that next product or service? Or is there a way that you've been sort of segmenting these new members coming in that's been particularly successful for you and the team?
Yeah, so we've added, I think, over 7,000 net new members to the credit union as a result of this program, folks that
Wow.
we likely wouldn't have reached otherwise. And the performance has been excellent. Over 97% are in repayment. And we've definitely seen a shift in the profile since we've added the Prime program. But yeah, we have three target segments at Vantage West. One is what we call our prosperous Arizonans. So they're 55 plus super prime borrowers. And it's interesting, as I was thinking about our segments and the programs that Upstart offers, there's an absolute alignment. So the Prime program serves those prosperous Arizonans. And
Great.
then we have our middle market, which is 45 to 54, AB credit. So, prime borrower. And those folks align nicely with the traditional program. And then lastly, we have our aspiring. So younger borrower, maybe new to credit, range of folks in the credit spectrum. And as a CDFI designated credit union, we're always looking for ways to extend credit to the low and moderate income borrower. And as you know, we've been in talks about the LMI, low to moderate income program. And
Sure.
so that would help us attract those borrowers and be able to lend deeper and invest in that group.
Right. Yeah. I mean, it's you take advantage of those programs that are available for you with
Yeah.
CDFI. The reason for CDFI is a very altruistic one. It's to try and sort of lift up those folks that are in low and moderate income areas, either through education or through financial literacy, or just simply meeting their product and service need where they are, and hopefully sort of get them into a more prosperous sort of financial situation. So there's that aspect of it, but also, I mean, financially, there's some great benefits and some great grants that can kind of come with that. CDFI programs evolved a little bit here. It used to be, I think, a little easier back when I looked at 6-7 years ago at my credit union to be able to qualify. It's a little more difficult now. But are you finding that that with sort of organically within Arizona, that you've had some successes with sort of breaking in through those low moderate income areas?
We have, yeah, and that's the bread and butter too of who we serve, and so that of course will continue to be a focus. And you mentioned the difficulty with CDFI, and of course we're finding that too. But we've since launched a very successful program on financial wellness. So it's a very robust program that a lot of our branch folks have been trained on to educate members. So, it's our goal to turn borrowers into savers, savers into investors. And so that's kind of the stepping stone of that program.
Right. And really fits in with your segmentation strategy, because you're likely looking to sort of migrate some of these members through different segments, right, as they become more prosperous and so on. And today's low to moderate income and maybe that younger demographic, they're tomorrow's homeowners. I live in Southern California. It's really hard to break in as a first-time home buyer in Southern California. It might be a little easier in Tucson and in some of the lower moderate income areas across the country. But maybe talk a little bit about your approach that way for first-time home buyers, given that the entry price has gone up from when we're 5 years ago, where we were looking at 3 and 4% 30-year mortgages, and now that price is a little higher right now. So how's Vantage West sort of managing through all of that right now?
Yeah, so my peer in the mortgage group, they've done an excellent job of addressing that. We know affordability is a huge problem. So they're offering some first-time buyer programs. They also have launched a 40-year mortgage. So
Oh, wow.
so they're really trying to address this problem that we know is nationwide, but it is a pretty big problem in the Tucson area. So that team's been working feverishly to create new products and services for our members to be able to address it, because we were hearing it a lot from members. Challenge.
I love that you've created a non-QM product, right? That is definitely needed there, and is specifically addressing that cohort that's trying to address. So kudos to the Vantage West team for thinking sort of outside the box on that, and for having the support again across the organization and your board of directors to be able to sort of take on those sorts of things. That's great, Michelle. Any other sort of early results on expanding relationships with? It's been pretty early on the Prime program.
Yeah.
I know. So Upstart just introduced it in July, and just for the audience, it's basically Upstart wants to make sure that we are providing loan solutions for all Americans, not just for those who the traditional credit scoring system may have lost in some way throughout their financial history, but really trying to attract Prime members with really good products at a really good price that's attractive to them. And Vantage West has been a partner on this Prime program now for 3 or 4 months. I mean, it's really changed for the borrower and member profile for you in some respects. How is that fitting with your segmentation strategy then?
Yeah, well, as I was saying, it fits with there's offerings. Each program that Upstart has fits with each of those segments nicely. And so, we started with the traditional program, of course, and the performance was excellent. And we want to lend deeper where we can. And as I mentioned, part of our strategy is to be able to lean into certain borrowers so that we can go deeper elsewhere. And the Prime program allows us to do that. But yeah, we have seen a shift in the mix since launching that. So, of course, higher scores, right? Lower expected loss rate. So it'll be interesting to see how those two programs play together, and then if we also introduce the LMI program. But yeah, it's early, but of course we've been
Sure.
pleased with how it's performed so far.
And are you thinking maybe a different sort of a marketing treatment to depending on where the borrower is coming from? So sort of looking within Arizona and maybe outside of Arizona, LMI might have its own sort of approach.
Mhm.
These prime borrowers may have a different approach than those that may be in sort of a lower risk tier or a higher risk tier, I guess the case may be. Maybe talk a little bit with your marketing team because you've got to work pretty closely with them
Right.
on making sure that those opportunities are kind of met with, I think, a relevant product or service outreach to them.
Yeah, absolutely. And, um, that's one of the things, admittedly, that we were so focused on growing and optimizing the program that we've not been as intentional with the cross-selling and the onboarding.
Gotcha.
But it is a huge focus for us in 2025. And actually, we're probably about a month away from launching an offer specifically to those that come in through the Upstart journey, a very rich checking offer, because now they're part of our fold. We
Right.
want to, welcome them into the member base and, hopefully they give us a try for other products and services. But yeah, I think, with the different programs and our slow and grow strategy, we're going to continue to look to expand other markets. Um, we were very strategic about how we did that. We did states kind of bordering Arizona, as you know,
Sure.
Barry. We were very, very careful around that. And we'll continue to expand, but again, monitoring and making sure that we're serving our target segment and reinvesting it back into the Tucson community.
Right. And the checking relationship, it's still the anchor product, Michelle, right? With all the evolution we've had in financial services, banks and credit unions, free checking 15, 20 years ago, that was kind of the big thing. It is still the anchor product that I think most financial consumers signify as, hey, my main financial institution is where my checking account is. And maybe it's less relevant now that checking account was opened at a branch a mile from my house. Because with I know Vantage West, you've got a pretty rich digital platform, right? Like I can be in Southern California and I can totally engage with your folks
Right.
and pretty much get anything I need in a digital or even over the phone. So it's with checking, it's not just with those sort of new Upstart borrowers within Arizona. You're also
Right.
kind of looking outside of the state borders as well, right?
Absolutely. Yeah.
And yeah, that's good. One thing with Upstart, so uh, uh, for the audience, so I worked at a credit union that was also an Upstart partner. We had expanded our field of membership to a new county, and Southern California counties are pretty big. There's a big population in them, and so the one that we expanded to had about 2 million people in it, and we actually used Upstart as one of our first outreaches into that county, so that we were able to find brand new borrowers and became brand new members in that county. So really with sort of zero marketing spend for that particular project, we had successful in bringing in hundreds of new borrowers and new members in that county pretty quickly. And then the marketing team were like, this is great. We can A/B test different ways of different approaches for them. We didn't have I think as precise a segmentation program as you have, which is probably a good enabler to make that as successful as possible. But yeah, I think cross-sell is those cross-sell opportunities are so important and that catalyst for growth for you going forward.
Yeah, well, and we see the feedback we get through, satisfaction surveys and folks saying this was such an easy experience. It was such a great loan experience that it's a great opportunity to serve up something else, right? When they've had that positive experience.
Absolutely. Good. So looking ahead, Michelle, like what excites you about the next phase of the partnership? Because you've got these sort of core borrowers and new members. You've got the prime now. Any other sorts of products or services or solutions that you're focused on here as we roll into 25?
Yeah, so we just started having kickoff conversations with you all around your HELOC offering, which is a great way for us to capture borrowers who perhaps bought a home during the housing boom and they're locked in at those low rates and want to tap into that equity. We've seen some great growth in our own HELOC portfolio, but again, capturing those that we wouldn't have access to. So we're excited to begin conversations around that. We just launched the Recognized Customer Program with you all. So if there is a Vantage West member that's coming into the Upstart platform, they'll now be routed to us, which is great. I participated in your AI certification
Yes, you
program.
did. Yes.
Yeah.
Which wasn't an easy, I mean, let's be honest, right? That was not an easy
I did
program.
the long version and the short version. Yeah.
Well,
But they were
kudos for
both great.
you. Like that was university level, right? And
It
still
was.
is.
It
And
really was. It was taking me back to stats class. But it was great. And I truly recommend it to anyone not only thinking of partnering with Upstart, but anyone just looking to get a better understanding of artificial intelligence and machine learning and
sure.
the differences in the compliance environment involved. So we've actually started to make that part of people's development plans.
Nice.
Every year, folks at Vantage West have to create a development plan, and because we are partnering so much with fintech, we have suggested some folks take it for
That's
their
great.
development.
That's great.
Yeah.
You talk HELOC. I read something not too long ago that 90% of all first mortgages in the United States have a rate of 5% or less right now. So people are kind of stuck in their houses
Yeah.
because of rate, but they hate their kitchen or they hate their
Right.
bathroom. And that's where I think the HELOC product kind of makes a lot of sense. Not just Upstart's HELOC product, certainly, but
Right.
any HELOC product I think
Yeah.
should be really at the forefront as credit unions are looking at 2025, because these are also really, really good members for other products and services that you may be able to offer. So
Yeah.
it's good that you have that going on. Well, Michelle, I want to thank you so much for talking
Absolutely.
to our audience today. Ali, could you pull up the slides, please? Thank you. So Vantage West is really one of Upstart's longest tenured and one of our most valued lending partners. But in addition to Vantage West, we partner with many other credit unions across the country, helping them deliver high-performing and profitable personal loans, while also helping with membership growth in their desired geographic market. We have over 100 lending partners across the country of all asset sizes and various geographic reach, like many of those that are pictured on the previous slide. Now, Michelle and I talked a little bit about how Vantage West has gained not only these high-quality performing loans, but very high-quality new members. So here's a visual of kind of what that new member profile looks like and some of their characteristics, including what we're seeing in early stages, an average credit score of around 756. So many of our credit unions have had success cross-selling to these particular members into additional products and services, and it's pretty exciting for us to see this, as this is a program that Upstart just launched with a few of our trusted lending partners here in July, and 3 months later, it's really blown up and become one of our primary value propositions that we have to our new lending partners and our existing ones of these new prime borrowers that are coming through. So if you're entering a new market, Upstart can find those borrowers in that designated geographic area, and these new members generally represent a pretty attractive demographic for building new member relationships. And finally, if you've got any other questions about what we talked about today or anything we missed, please feel free to reach out to Michelle or I directly. You can see our contact information there. Michelle and a few others from the Vantage West team will be attending the ACU Lending Conference in Nashville in just a few short days. Members of the Upstart team will also be there. We really look forward to it. It's actually one of our favorite events of the year because we see a lot of our lending partners. We also see a lot of prospective lending partners, and there's a lot of questions and a lot of curiosity around, well, how exactly does AI work in lending? Like, what's sort of your secret sauce, your solution with us? And so it gives us an opportunity to really talk to lending professionals across the country about all the things that we're doing here at Upstart. But we'd love to meet you in person. If you're coming, please stop by our booth when you're there. And I want to thank everyone who joined us today, and thank you to Michelle. And I'll turn it back over to our moderator.
All right, folks. Well, if you had any questions, now is your chance. Please don't be shy. I see we had a couple here in the chat. Um, the first one, we have someone interested in your AI certification program. Is that a free program, Barry?
It is a great price. It is free. So you can go to upstart.com. And while I'm talking, maybe my friend Allie can help with the exact link for that. But yeah, it is a free course. We actually introduced two different programs here in 2024. One was AI certification that Michelle was talking about, which is less about Upstart and more about artificial intelligence as a topic. And it really is sort of college, university level, but a good understanding of what AI is. There's a lot of, I think, misunderstanding about AI, and people think that there's some sort of doomsday scenarios and so on around AI. This isn't it at all. This is really just taking, for Upstart's models, for example, we use over 70 billion data points to come up with our model projections and forecasts as we go through the underwriting process, as we validate the identity of borrowers that are coming through Upstart. So it's we're using it because there's just only so much capacity that humans have for it, and we know that through machine learning we can get to answers faster and be more precise with it. So that's why we really, I mean, artificial intelligence is really in our DNA. It's in our bones. It's how we got started, and really how we believe that we're going to be just supporting all of our financial partners as we go forward with Upstart. And I'm just looking at what the course is, upstart.com/AI hyphen certification. There is also an Upstart program certification. It's really more for those lending partners that we've just brought on. It's a good overview of what Upstart is and sort of how we conduct our business. If you are to partner with us, it's that one's a little more consumable. It's about an hour or so. But would highly encourage anyone who's interested to check that out as well.
Yeah, thank you for sharing that. I think that sounds like an incredibly useful certification for lending professionals, and I would encourage you all to check it out. Another question I got here from a member: how do you distribute the loan growth between loan types, whether that's auto, mortgage, or personal loans?
Yeah, so we have goals, right, for the organization set as part of our plan for the beginning of the year. So that's, from a lending perspective, how we distinguish what we're going to focus on for the entire year. And then specifically the Upstart programs, now that we have a couple of them, it comes down to what's happening across the credit union. Do we need to bump up the return? Are we looking for more volume? I would be remiss if I didn't talk about our capital markets team. So we have a small but mighty team that's focused on loan participations. So it's making sure that I'm poising my portfolio for them to take it to the secondary market. So those are all things that come into how we distribute and how we look at where we're going to book volume.
That's a good point about participation loans. So 2 years ago, no, I'll go back 3 years ago. There was such an imbalance between buyers and sellers. There were hardly any loan pools at all, and we were all crying for them, and we were all outbidding each other, which were just diminishing the margins so much it almost was not worthwhile. Although it did boost up that side of the balance sheet, and then it shifted, almost overnight into there were way more buyers than sellers. Where is it at now? Pardon me, way more sellers than buyers, I should say, is where it shifted. Where do you see that now, Michelle?
Yeah, I mean, I think the team is finding that there's a bit more of that balance. So they're not struggling as much to find buyers. And then, this past year, we've actually had a really good year of selling participations. So I think that's what they're planning on seeing again in 2025. We have some lofty goals on that part of the house as well. So hopefully that continues.
That's good. I mean, so think about an environment where we have rate reductions. It never really
Yeah,
never really happened in 24.
right.
Hopefully it happens in 25. I don't know. The Fed dropped 50 basis points and then the 10-year went up 40 basis points. So that kind of didn't make a lot of sense. But let's assume for a second that we do see some rate reductions from the Fed in 25. I mean, that would tell me that any paper that you put on in 24 or 23s would be a little higher yielding, probably a little more
Right.
attractive for
Yeah.
those for those credit unions that are looking for to build their loan portfolio. So yeah, good. All right. Thank you. Any other questions, Adam?
One more question here from the members. Is there an intention to migrate members between the segments that you mentioned at your credit union, Michelle?
Yeah, we do. Obviously, there's varying degrees of the credit spectrum. So it's, trying to move folks up through the credit spectrum and trying to move those folks who are borrowers to savers and savers to investors. So we try to be truly intentional about not only where we're booking, but then the journey of the member once they come into our fold and the types of things that we serve them up, whether that's financial wellness, or if it's, a high yield money market account, right? So depending on where they are today and then trying to, evolve and help serve them.
We had one more question come in. How has your charge-off DQ ratios been affected in comparison prior to and after partnering with Upstart?
Yeah. So I think like most folks, we're seeing delinquencies and charge-offs rise, not only on our regular portfolio, a little bit on the Upstart, but we're within our tolerance. So we set an annualized expected loss ratio with our Upstart partners, and then we're constantly monitoring that. So if we have to make adjustments, we will and we do. You can see a little bit of increase in charge-offs in some of our earlier vintages, but again, that's like post-COVID era where, again, some of that money dried up and, it's exactly what we saw on our own portfolio too.
Yeah, and I'll say thank you, Michelle. From Upstart's perspective, our lending partners get to choose sort of the risk tolerance that they're willing to accept. So they can lend super deep, they can lend super prime, somewhere in between. And we do really have across the spectrum lenders. Some are looking for volume and are comfortable with maybe higher yields and also higher losses. Some are more comfortable with, hey, I really want to limit my losses. But I'm okay accepting a lower return for that sort of more high quality paper. And again, we can accommodate across that entire spectrum, even a blend of it as well. Some are trying to say, hey, with like super prime, we know that the loss rate's really low on that anyhow, but we also acknowledge the return's low because we're trying to get the best possible APR offer out for those super prime borrowers. By the same token, you can lend a little deeper. And on a blended basis, now you've got a return that's more attractive to the finance folks, especially as well. So
and the loss rate.
And the loss rate, exactly. Yeah.
Well, it looks like that was our last question. So that's going to conclude our webinar for today. Thank you, Michelle. Thank you, Barry. And thank you to our audience for joining us. Really appreciate it. If you could please take a moment to fill out the evaluation on your screen, your feedback will help us to improve the delivery of our programs and is very much appreciated as well. Again, thank you for joining us and have a great day.
Thank you, Michelle. Thank you, Adam.